Supplemental, no. Oh, we don't have one for this week.
No, we
Because it's
don't.
mainly just reading. Yeah.
Week 3 is the easy
No.
week.
Yeah, week 3 is super easy. All right. Although everybody's probably cursing at me right now for saying that. Let's see. Don't imagine anybody's gone into week. Let me look at support form from last week. See if there's anything in here that maybe trips some folks up. Oh, I got a few things here. Does anyone have questions or really challenge? Okay, ROI percentage. ROI, return on investment. Net income divided by total assets, probably return on assets that he's mentioning here. We just covered
Yeah,
that.
because we haven't even talked about ROI at all yet.
Yeah, I think it was probably ROA. So we got that one. Internal users, external users. Okay. Okay, how do you determine net income loss if I have this information? Okay, we did cover that a little bit, but maybe on dividends. Okay. Let's go back. So on decision analysis. Wrong one, not that one. Preparing debits and credits, double entry. Yeah, okay, somewhere around here might help out. So this equation is going to help you out. You know, if you have assets and you have, let's say, equity, you'll be able to figure out liabilities, as you mentioned before. If you have assets, liabilities, and let's say common stock, but you don't know what, and it only tells you that you need to figure out net income, right? So in something like that, you might have, let's say, I have assets of 100 for grins, liabilities for say 20, and I have common stock for who knows what. Let's say let's say 60. Okay, so in this, they may have also said that I remember one. That's right. They said something like you gave out, I don't know, 10,000 in dividends. Let's say this is what they give you in terms of information, and the question is, what's your net income for the period? Well, in this, you know that your general equity is going to be 100 minus 20, right? That's your equity value. Now you also know if you take out common stock, actually minus this, then, oops, yeah, then your remainder, I'll just work through this a little bit of time, is that plus that, right? So you got 20 left. But net income, he gave out 10,000 dividends. So effectively that was a negative 10 on this equity. So you have to add it back in, add back dividends. So we're just gonna add those back in. And so that should give you your net income. Is really the remainder plus the dividends put back. Now the way you may say, well, how do you figure that out really when it's all said and done? So I know that I have common stock, oops, in my equity account or equity area of the balance sheet. I know I have net income, dividends. We'll start there. Dividends, and I know I have retained earnings or effectively net income. Okay. One of those. We'll just assume retained earnings is 0 for now. They really didn't really give us that information. So we'll assume that. So common stock, I knew I had 60. I know I had minus 10 for dividends. So when I do my total equity, yeah, so this is another way of figuring it out. So if you plug in your knowns and then figure out what your total is, you're only at 50, right? So how do I go from 50 to 80? So I figured this out by with this two pieces of information. I need to get to 80. Well, you can do that a couple different ways. If you can do simple math like this, it's easy to just say, okay, I need 30 in order to get to 80. But let's say it's not so simple. Let's say that in reality, I don't know, this is 60.66, right? And this is minus 10,996. I'm just doing this in like rounding decimals. And I don't know what it really is, right? It's going to be a little bit harder for me to do the math to get to 80. The easier way in Excel to do this is to go up here and do a little data thing and do a what if. You can do a goal seek, and you can set that cell to 80 and change your net income value. And by doing that, it'll go through a couple iterations and it'll tell you that your net income, oops, let's do that again. What if goal seek that value to 8, not wrong value. This value, what if goal seek, there's a couple of ways of doing this. I'm just doing the straightforward way. 80 by changing net income. Hit OK. It does it. I hit OK. And it keeps it. Now I know it's 30.3. Right. So knowing how what goes into equity, pluses or minuses, will get you to that number either this way, you know, by deduction, or by building out the balance sheet, putting in the values you know, pulling it up, and then figuring out how do you get to that number that you were able to figure out with the accounting formula. I think there was actually a problem that did that in the quiz. So I've given you a theoretical one. If I go to the quiz access, I think it's like 15 or something. So hopefully, let's just go to some of these back here. Oh, this is where you had to build the income statement. So everybody did that. Let's try 11. Oh, here's an accounting information, accounting thing. Whole ass. Yeah, this is the one where everybody was not B1, but one, where you have this information, you have to figure it out. And so if I just port this over to Excel, let me give you an example of what I mean. Excel. So this should be, I'm gonna do it this way, base values. So this is the information that they provide. Then they give you a couple of different scenarios. So if I know all this information, I can do the change, right? Or yeah, the change. So the beginning, take the ending minus the beginning, that gives me one number on each of these. So that's what changed in from one year to another. By default on this, before I even get started, I know the problem a little bit, but I need to figure out the equity side, right? So I can say total equity, which is another reason why I like Excel and doing this all here, copy and paste it and then start working with the data, right? I know that the beginning of this, the beginning, I had assets minus liabilities equals equity. So I had equity of that, and I can do the same thing. of that, and the change should be the same. I can verify this by just doing that minus this. There you go. Now, what's that $17,000 difference from 1 year, from the beginning of the year to the end of the year? How's it made up of, right? Determine net income loss for each of the following separate situations. So I got $17,000 of which, so let's say, so let's start with A, and we'll do B, and we'll do C. So I started out with, let's see, a change. So add stock. No, let's see, change. This is going to be hard for me to think through this a little bit differently. Let's do this. Add stock. So that's a $4,400 deal here. This one's a $15,350 deal, and this one is a 0 deal, right? And on the other one, I issued dividends. So on this one, minus 8,400. And I'm just doing impact to equity. So add stock is the increase, issued dividends is a decrease. No dividends were paid out. And on this one, issued no, and dividends of 13 were paid. 13,400. Okay. So we got that. And so we could do a total change. We know that we sum these, go back to the way I showed it the other way, right? This is the total change that I've identified so far. So then the question is, how does the net income adjust for that? And doing the same thing I did before, I'm targeting 17.7, right? So I can go here, I can do what if, goal seek, change that value to 17,700 by changing this value, and it'll walk through it and it'll produce the number. We can do the same thing here. What if, goal seek, 17,700, that's the change. By changing that number, and that's that. And do the same thing. Of course, you can do some other algebraic type formulas. Let's say I did this wrong, like I got the wrong cell. I can automatically just change it here. Two values, 17,700 by changing this. Okay, voila. So these should be my numbers for all three scenarios. Did you follow me on that? Right. So first I figured out what total equity, well, really I figured out the changes. I figured out what total equity should be. I figured out what they're trying to drive for in terms of, 1 point to figure out net income. Because I knew they gave me common stock, they gave me dividends. So common stock, dividends, and some change in net income is going to generate this change. And just work through in each of the scenarios what that looks like. And should be 21.7.
So Brian, I get,
Yeah.
go back to that spreadsheet real quick. And I got confused at one spot.
Yep.
I get the beginning, end of year changes. Where
Yeah.
did you get the 17,700 in cell F6?
Same thing. So, if you look at, okay, so F2, right? So I'm looking at the change in assets versus the change in liabilities. Is going to represent the same thing as a change in equity from from the beginning to the end of the year. So you can go about this a couple different ways. I could have ignored these two things because I have $30,000 more in assets at the beginning of the year, at the end of the year than I did at the beginning. I have $13,000 more in liabilities than I had at the beginning of the year. Now, if I just, ignore these numbers right now, if I apply the same logic to determine equity as I did like at the beginning or at the end of the year, then the result is that I have a $17,700 change in equity from the beginning to the end. And so this is what one piece of information I need in order to determine what the net income was.
Oh, I see where it is. So in E6, that was a computation of the C6 minus D6.
Yep. Yep. It was just the accounting equation. Well,
Okay.
now this is just the change. This is just the pure raw change in equity, right? Based on all this stuff. I can also get to it by just using the accounting equation to figure out the change in equity. And that's why I was just doing that to verify I got my calculations right.
Got
Double
it.
checked. Now, one other scenario is that there's no change in stock, right? No dividends issued, and I have a $17,700 total change, right? Oops, copy paste over here, right? So that one's easy. 17,700, right? So this is no change in anything. Everything's net income related. But when you have other changes in the equity accounts, then you have to figure out, well, what's the true change in net income if you don't have that information given to you.
Okay.
Okay. So this is how they test your understanding of the accounting equation, how they test your understanding of how the income statement balances flow in to equity. What are the components of equity, how they might change. They usually don't test the components of assets or liabilities because those, if they go up, they go up, and if they go down, they go down. There's really not the type of dynamics that equity has to it. Because you can have things going up and down. And so they're just testing your ability to work through that. And this is one way of doing it. Like I showed, I just copied and pasted the information and just walked through it in a kind of a matrix style. Now, if I didn't do it this way, just as a little afterthought, if I didn't do it this way, if I did it slightly different, let's say instead of goal seeking the number, I use the information that I have, which is okay. So this is the change. See, noted change. How about that? So let's just sum this, right? So that's minus 4,000, F2. And then I just say change in equity. This is going to be the same number that we have up here, 17,700, right? I'll just make this the same all the way across. So now I just have to do net income, derived net income. So on that, you're going to end up, it's going to be a little backwards thinking. You're going to take the change and you're going to add it to no, you're going to subtract it from, let's see, equals noted change, but I want to add back the other number. Because I know this one's going to be that minus that because I've already identified that change. Oh yeah, that worked. Yeah, that does make sense. So I'm going to take the change in equity and I'm subtract out what I've already identified. That's what that math basically does, right? Take the change, subtract out what I've already identified. What I haven't identified then is de facto net income. So I get the same number, but just a slightly different way. I know it's blowing some people's minds, so I'll let it sink in. Thankfully, this will just, be a video that you can reference. can go back to from time to time. Okay. I think that's about it for one night. What do you think, Todd?
Is it just you and me?
Yeah. Let me stop recording.